a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hi everyone, welcome to Exploring ETFs. I'm Neena Mishra, and today we are talking about Japan equity ETFs. And we know that the surge in the US dollar is one of the biggest stories in the markets this year. And because of the surge in US dollars, many international markets have been struggling. And while the US economy is slowing down, these economies, particularly in Europe and emerging markets, they are likely to do much worse than the US because of the surge in US dollar. Europe is going through its own energy crisis, and emerging markets, which have their debts priced in the US dollars, they will have a tough time. Now, there are few economies which actually benefit from the rise in US dollars, in the US dollar. And Japan is one of them, because Japan is an export-oriented economy, and so the surge in US dollar benefits Japanese exports, though they would benefit more if the yen weakens against the euro and the Chinese renminbi as well. But the surge in US dollar also benefits Japanese exporters, and in fact, the US dollar recently touched its 30-year high against the Japanese yen. And while the Fed here is raising rates, and all other major central banks are also pursuing aggressive tightening, the Bank of Japan is the only major central bank which still has easy monetary policies, and it is likely to continue its easy monetary policy because inflation rate in Japan is still very low. It is around 3%, which is very high by Japanese standard and also above the Bank of Japan's target of 2%, but still very low. So the Bank of Japan can pursue its easy monetary policies. Now, another reason to look at Japan is that these Japanese companies have very strong balance sheets, particularly after years of Abenomics, the economic policies launched by the former late Prime Minister Shinzo Abe, and they also have good dividend payouts. They are worth a look. They have done better than the US markets. But when it comes to investing in Japan, it makes sense to look at currency hedged ETFs because the yen has weakened so much. So take ETFs that take the currency part out and look only at the stock performance. So we are taking a look at 3 currency hedged Japan ETFs. So the first one I'm highlighting is by WisdomTree, very popular Japan ETF. It focuses on dividend-paying exporting companies in Japan and follows a dividend weighting scheme. As I mentioned, it is quite popular with $2 billion in assets and has an expense ratio of 48 basis points. If you want to learn more about this ETF, you can go to the quote page on Zacks.com. You can read our research reports, articles, very juicy dividend yield too. And you can take this link, the external link, to go to WisdomTree webpage for this ETF. Now, WisdomTree has had Japan-focused ETFs for a long time. So they have some good research too. You can look at the research and see what exactly this holds. So you can look at the holdings also. So Toyota, Japan Tobacco, Mitsubishi Financial, these are the top holdings in this ETF. And again, it looks only at the performance of these exporters and takes out the currency part, the movement in the Japanese yen. And then the second one that I'm highlighting is by iShares, the iShares currency hedged Japan ETF, ticker symbol is HEWJ. This is the currency hedged version of the popular iShares Japan ETF EWJ. So large and mid cap Japanese stocks, market cap weighted, 50 basis points expense ratio, has 330 million in assets. Again, to learn more, you can go to the quote page on Zacks.com. And from here, there, the external homepage, this is the iShares Hedged MSCI Japan ETF. And as I mentioned, it is just the if you look at the holdings, it just holds MSCI Japan ETF, EWJ, and then uses some derivatives to hedge that exposure, take the currency exposure out. You can learn more by looking at other details on the web page. The third one that I'm highlighting is slightly different, and it has done a little better than the large cap companies focus ETFs because it focuses on smaller Japanese companies. This is also dividend paid, same scheme by WisdomTree. Slightly more expensive, 58 basis points, but this is small, so you have to be cautious in buying or selling this ETF because bid-ask spreads are likely to be high. But if you want to learn more, you can again go to the quote page on Zacks.com, and again, this also has a very nice dividend yield. And if you go to the WisdomTree web page, you can look at their research and also at the holdings. These are not familiar companies like in the large cap version, but you can take a look and see what it exactly holds. Now, on the last slide, I have the comparative performance of these three ETFs that we discussed versus the unhedged Japan ETF EWJ and also the S&P 500 index. So the one which focuses on smaller companies, that is the best performer. It is up about 2% year to date. The one that focuses on large cap Japanese exporters, that is also in the green, though just slightly. The iShares hedged version of EWJ is down about 5%. The S&P 500 index is down about 19% over the past year. And EWJ, which doesn't hedge the currency exposure, is down about 29% over the past year. That's mainly because of the decline in the Japanese yen versus the US dollar. Thanks for watching. Make sure to check out Zacks.com/promo for an interesting offer, and also make sure to subscribe to our videos so that you do not miss anything, and we will see you next week.